Hello, everybody. It's good to be back on the Cannabis Investor webinar. I haven't done one of these in a while, so thank you, Doran. So we are Viridian Capital Advisors, and what we're going to be talking about today is tracking the capital flow, the investment capital that's come into the legal cannabis industry. For the past 2 years, we have been tracking nearly all of the capital markets activity in this space, which means capital raises for both private and public companies and M&A transactions for both private and public companies. And we track those according to the 12 different sectors of the industry. We'll go through this in a little bit. The reason we're doing this is, as investment bankers, where we advise companies on acquiring other companies or raising capital or corporate structuring, if you don't have a sense of how your infused products business or biotech company or dispensary who might be looking for money, if you don't understand the last 10 or 12 or 15 transactions that competitors of yours have done, how do you know what valuation is right for your round? How do you know if you go out and do an equity round or a debt round? How do you know the right investors to target? So the time, the attention, the money we've spent on curating and building what we believe is maybe the only and certainly the most robust database of its kind, really is uncovering a lot of very, very interesting trends as to where the capital is flowing into this market. So we started a couple of years ago. We were one of the early entrants into the legal cannabis market from a investment banking advisory practice. We are a bunch of licensed investment bankers and research analysts and brokers. Many of our on our team have had decades of experience in raising capital for emerging growth technology companies and executing M&A transactions and building boards of directors and taking companies public and in really helping early stage companies grow, position, build, finance, and ultimately exit. And we were asked to help a couple of cannabis companies about 2.5 years ago, spent about a half a year trying to understand the industry, and eventually launched Viridian Capital Advisors, as I say, about 2 years ago now. So we launched because, number one, we were asked to help a couple of companies, and even before Viridian existed, and once we did our homework on the industry, and I'm talking about spending time in Colorado and Washington State and Oregon and San Francisco and Washington, D.C., speaking to the DEA and law enforcement relationships of ours, it became apparent that the industry had very significant growth prospects. There were real drivers of growth in terms of regulatory change and state legalization and the acceptance of legal cannabis by the majority of the citizens of this country. So there were real platform for growth and sustainable growth. But what was missing, and really missing a couple of years ago, was professional management teams that had a real budget, a real business plan, a real go-to-market strategy, knew how to build a balance, real governance in the form of a true board of directors that brought best practices, standard operating procedures, real execution integrity, real financial controls, so that today 2/3 of the public companies out there do not file their Ks and Qs on time. This is what we do for our clients. It's not just a matter of raising a dollar or buying a company. It's getting these companies set up to the point where they are professionally managed, they have financial controls, they have real budgets, they're ready to face the street, the investment community. And that's what we do and get engaged to do before we ever go out to raise a dollar. And we do have a dedicated M&A practice. The opportunity to acquire companies in this space is very significant today. And I would say that the better managed and better run companies out there, public or private, are beginning to incorporate acquisition as a part of their growth strategy. We've been fortunate to have received, as the industry has, a tremendous amount of media coverage by the mainstream media, and not only inures to our benefit in building the Viridian brands, but it also adds to the benefit of our client companies in terms of their exposure and the awareness of their companies to the investment community. So just a couple of numbers and facts as we start to uncover our data set. Today there are about a little over 200 publicly traded cannabis companies in North America. The majority of these in the United States. In Canada, the majority of the public companies are the LPs, the licensed producers, under the federally licensed medical marijuana program or federally regulated medical marijuana program. We'll talk about in a second how there was just a burst of activity creating this breadth of public markets, of capital markets, but it's reminiscent of other emerging growth tech sectors in the explosion of public companies and the capital markets that have developed around those public companies, meaning capital raises and M&A. And here it is. We really consider the birth of the industry from the business perspective to be January of 2014. January of 2014 is when Colorado and Washington State launched their adult use or recreational marijuana programs. They were passed 2 years prior in 2012, but it took a couple of years to actually launch the programs into effect where the licensed dispensaries and the licensed grows actually stood up operations. And when that happened in 2014, what the world saw, or whoever was watching, was that the legalization of cannabis was not only opening up very niche opportunities for those users of cannabis, either the THC or the CBD side, for medical use, for wellness, through the gaining of a medical marijuana card and getting a recommendation from a doctor that you were able to walk into a licensed dispensary and buy product for medical use. But what January 2014 opened up was that the majority of the users of cannabis in the United States, which is estimated to be about $50 billion in size, that's a Rand Corporation figure. Now that market is beginning to open up so that there's need for agricultural technology lighting, for security, for software, for real estate, all the other ancillary service providers that can not only sell into a very niche medical marijuana market, but now the entire market. And that's what drove the growth in, the true growth in new technologies, products, and services, in new companies being launched, and in new public companies. And that's pretty well, clearly shown in this chart. I will say that the days of January 14 through January 15, and I would say it even started a little back to the middle of 2013, when there was visibility to the launch of these recreational programs in Colorado and Washington State, that there was a wild, wild west mentality, particularly among the public companies in the space. A lot of that still exists. And what I mean by that is you didn't necessarily have seasoned, experienced operators, CEOs, COOs, CFOs running these companies. You didn't have real strong boards that brought great governance and oversight and best practices to these companies, leading to the fact, as I said before, roughly 2/3 of the public companies do not file Ks and Qs on time. My feeling is about that is you shouldn't be public, right, and have the advantages of being a public company if you're not able to be compliant with regulations. So there was a real immaturity and lack of experience in the capital markets. That's starting to change, and the change really began happening over the last year. And one of the most significant areas where we see that change is public companies that file registration statements to register an amount of stock so that they can use it to raise capital, or they can assist shareholders in selling into the market through having registered unrestricted stock, which is really one of the ways to create liquidity in a small cap public company. Back in 2014, 2013, the beginning of 2015, we didn't see any registration statements, S1s, S3s, getting through the SEC review process, as in none. TerraTech, in the beginning of 2015, a company that actually touches the plant, was the first to get an S1 through the agency. And since then, we're probably up to 18 or 20 public companies that have filed registration statements and have gotten them cleared through the agency in one of two manners. But it shows a maturation of the capital markets. It shows that the SEC, which has been quite, what's the word, heavy-handed perhaps in regard to public cannabis companies, right? Issuing several investor warning letters, suspending some companies, delisting some companies. By the way, this is all well earned on the part of these public companies. They were just not operating correctly and with integrity and in compliance. But as there's been more of a maturity among these companies, in many cases, because as bigger money and smarter money comes in to these companies, they're mandating better operational controls, better execution, compliance with regulatory requirements, et cetera. We're starting to see an improvement in the capital markets. Mass Roots was the first true IPO in the market that we saw about a year ago. There are now companies up in Canada that were among the first public companies that were the licensed LPs that are now looking to dual list down here in the U.S. market to get to what is the largest speculative market in the world, in the United States. So it's a good sign. The markets are maturing. We maintain an index, the Viridian Cannabis Stock Index, that tracks about 50 of the 220 or 30 public companies that meet very, very minimum requirements in terms of market cap, filing your Ks and Qs, a certain amount of your stock in the public float, so there's some hint of liquidity. So we follow about a fifth of all the public companies. We don't do this to recommend stocks. That's not the business that we're in at all. This is not a recommendation platform. We do it so that we could track the performance of these companies in terms of not only stock performance, but valuation, where the capital is being raised, what is the structure in terms of those capital raises, right? Public companies have to disclose all of this in filings. So it makes it very easy to track the data as we do. That's why we maintain this index. But you can see in 2014 when Colorado and Washington State launched adult use, the public stocks kind of went nuts and got to a severe state of overvaluation, and people, I think investors were playing the theme of pot, not looking at these companies as businesses and measuring them as businesses. And just like the dot-com days of 98 and 99, there was a correction in the cannabis public companies in 2015, quite a severe reaction to the downside. In the beginning of this year, in the first quarter and in the second quarter, we're starting to see I think a stabilization among these public companies. I think there's still a long way to go in vetting out companies that are not performing, are not executing, are not being compliant. So I think we still have a ways to go. But clearly we've had our a burst to the upside. We've had a vetting, a weeding out, no pun intended. Things are beginning to stabilize, and again, a general maturing of the capital markets. Really significant is, as we do, tracking not only the amount of capital that's coming into the space this slide shows, but the next slide showing the quality of the investor that's coming in. So you can see the increase in the amount of capital coming into the space, both into public companies and into private companies. We show a total there of $928.8 million. In fact, we recently tracked our billionth dollar of investment activity in this market over the last 2 years. So still a very, very small market relative to other asset classes out there, whether it's real estate or biotech or social media, but significant year-over-year, quarter-over-quarter increases. And here's what I was referring to in terms of the type of investor that's coming into this market. In 2014 and certainly in 2013, this market was and still is dominated by the retail investor. Not that there's anything wrong with that, but that's just the facts. And this is particularly true for the public companies. So there is a real issue of illiquidity in the public market stocks, as for any of you who follow those know. It's a problem. But the trend lines are moving in the right direction, so that in 2014 we had single-digit participation on the part of the PEs and the VCs, private equity venture capitalists and angel investors, and you could see there was a material pickup in 2015. We'll release our numbers, for this at the end of this year, but I can tell you that this trend line is continuing to move upwards. So a very, very good sign that sort of the traditional institutional market, albeit still very much out of this industry, are coming in more meaningfully. It may not be the funds themselves that are investing for many reasons, but now we're seeing the leading portfolio managers at larger funds invest personally. And so it's just all sort of nuanced, consistent change. I think one of the reasons we're seeing this type of jump in the professional investor coming into the market is the fact that state legalization continues to roll forward, right? We're at 26 medical, 4 recreational. We've got 8 or 9 states on the ballot in November for voting on legalization measures. The cherry on the cake is California, but you've got Nevada, you've got Massachusetts, hopefully the establishment of a real East Coast business industry in cannabis, which for all intents and purposes does not exist today. But the professional investor has more confidence that this is ultimately going to become a national industry, that there is not an there's less of a likelihood of an existential threat to the industry from a different administration coming in November and rolling back the Cole memorandum or the Supreme Court ruling that this is a states' rights issue. Right? There's less of a likelihood of this happening now that more than half of the states have rolled out legalization programs, and we're about to add on a number more in November. So I think the professional investor is feeling more confident in this industry as an asset class, number one. Number two, we have a couple of years history now of, particularly in the public markets, where you can see revenue growth. You can see capital raises. So there's a couple of years of operating performance that investors can look at and due diligence in order to see, okay, which are the best performing companies? Which are the companies that are developing real sustainable market share gains? Which are the industry sectors and companies that are attracting the capital? Just more ability to do your homework and do real diligence. So I think this trend is going to continue with the professional investor coming into the marketplace. Along these same lines of why more professional investors are coming in, we're also seeing the structure of capital raises improving for companies. So that in 2013, 2014, the far majority of capital raises that were done by both public and private companies were in the form of debt, whether it was straight debt alone, secured or not, or it was convertible debt that had an option to convert into equity. And that just tells you one thing, that the investors at that point in time wanted to have positioning in the industry, but wanted to have security as being a lender and wanted to have that security on the balance sheet. And many of these transactions, as I'm sure many of you know, were not very friendly to the issuer, the company, the borrower. They were toxic convertible debt, they were floorless convertible debt, and when the public market started to correct in 2015, it made these convertible instruments very toxic to the companies, basically meaning as the stock prices went down, the conversion prices of these debt instruments also went down. So it was really a compounding effect to the downside for these public companies. Was a main reason, well, not reason, it was a main driver of the decline in the stock prices that we saw in 2015. By the end of 2015, we began to see the change. And the change has really manifested itself this year, where the majority of the capital raises that we track are in the form of equity or equity-linked transactions. And what that tells us is that there is a higher risk tolerance on the part of the investor to be a common stockholder or a preferred stockholder, not having to be on the debt side of the balance sheet with the security that affords, but with the limited upside that affords. So now we're seeing more and more investors being comfortable taking equity positions in companies. Again, a very good sign and another nuanced sign that the capital markets are maturing. This is an example of the type of reports we put out, really just all in an effort to track the capital markets activity. Many of you hopefully have seen our reports. So when we launched our first report a couple of years ago, the first thing that we did really for our own use is to categorize the industry in what we thought were the main buckets, the main product or technology sectors underlying or comprising the legal cannabis market. And this is what we've come up with. It's changed marginally over the last couple of years, but on the whole, this is what it is. And the reason we do this is if you're going to be advising companies or significant investors, you better understand that the biotech opportunity in cannabis versus ag tech or software or real estate or infused products are very distinct. The business models are different. The requirements for capital are very different. The effect of regulation on these sectors is very different. The margins, the pricing, the go-to-market strategy, they're different. These are distinct markets on their own, right? Big real estate market out there, big biotech market out there. These just happen to be the underlying, product categories within cannabis. So this is how we started to track the capital markets activity. We did it by sector. Because again, if we're representing a software company or an ag tech company or biotech company, you have to understand the specifics of how these companies are positioned in the market, the real requirements for capital, how that capital is spent and invested. You've got to be smart at a very granular level if you're in our business, and so this is how we launched, and this is still how we track the industry. So here's a kind of a very high-level look at our data set. This is for the first half of 2016. Just looking at the time. And as you could see on the bottom there are the 12 categories. And the bar chart shows for each in Q1 and Q2 the capital raises. We've segmented them very generally into equity and debt. Underneath our database is we know if there's warrant coverage, we know if there's liquidation preferences, we know all of the granularity for each deal, but just generally speaking on this call, we just kind of put it into two buckets, equity, debt. So you're seeing a couple of things here. Obviously, there's one big bar in the middle that seems to be outperforming all the other categories, and that's cultivation or retail. Cultivation is the grows, retail is the dispensaries. These are all licensed operations in legal states. And what this, outperformance, if you will, in terms of attracting capital means is that, the beginning of any business in cannabis starts with growing the product, growing the plant, and selling it, right? It's the production and the sales side. It's the licensed part of the industry. And as states legalize and as markets develop and grow, there is a persistent increasing need for more product. The plant that either is sold in the form of flower or oils or infused products or drinks or whatever it is. And what's clearly happening is the size of the grows, the size of the cultivation facilities is, trying to catch up to demand. And so 5 years ago, a large cultivation facility might have been 15,000 square feet. Today, a large cultivation facility will be 300,000 or 400,000 square feet. There's a need for capital. There's not only a need for capital to acquire the land and the labor and the soil and the lights and all the other composition of grows. There's also a need for advanced technologies. That's why the bar on the left, ag tech, had a nice first half in terms of raising money. This is where the advanced lighting technologies come in, the advanced air filtration technologies come in, the advanced HVAC, water, power, intelligent sensor systems come in. Because although 5 years ago, 10 years ago, this was a lot of grow your own mentality in this industry. There's a lot of people that have been doing this a long time. When you're getting to a 250,000 square foot grow that needs 50 million to stand it up or 20 million to stand it up, that capital is going to mandate that you are aiming to be a low-cost producer, that you are bringing in advanced technologies to affect quality, to affect yield, to affect water usage, to affect energy usage, right? You're operating as optimally as possible. So bigger money, bigger facilities is also bringing in better practices. And ultimately, marijuana is a commodity. It's a crop. Like any other crop out there, you're subject to supply and demand and pricing. And I'm sure many of you have seen that the wholesale price of cannabis has consistently been declining over the last couple of years. It will continue to do so until it finds some equilibrium as this becomes a national market. And in any kind of a commoditized industry, the low-cost supplier is the only survivor. And that's what we're seeing in this industry. So cultivation and retail, raising a lot of money, ag tech, and then of course what you'll see in these slides, biotech continues to be the biggest attractor of capital, not only because they need it, but the upside from this industry being truly a pharmaceutical industry that's going to be FDA regulated ultimately is the significant upside. One of the biggest opportunities in the entire industry. And so the biotech companies have been consistently receiving significant amounts of capital. These are the private companies and the capital raises that have been done privately. A couple of differences with the public companies. The main one being that first big bar consulting services, raising the most money in the first half of the year. What is consulting services? It's principally consulting groups that advise investors and investor groups about how to apply for a license, whether it's a dispensary license or it's a cultivation license or it's both in the states that require an integrated model. You have to own the dispensary, you have to own the grow, you have to own licenses for both. The application process for a license has become so complex, so cumbersome, so expensive, and so variable state by state that the advisors have cropped up that have had experience in helping other investor groups successfully achieve licenses. So it's rare to see any investor group, even ones that are well-funded, that have not engaged an advisor to help them write the application, to help them build a board that's full of politically connected, high visible business leaders in a state, or sports leaders in a state, or medical leaders in a state, right? You've got to bring cachet to your team and identify real estate because of certain zoning requirements. It's just a very tough process, as it should be. These are licenses to grow and sell marijuana, and these are very valuable licenses, and there's more competition. And it's getting very, very expensive. I would say that the average company that went after a New York State license, of which 5 were ultimately awarded, raised at least $10 million. And I'm hearing even higher numbers now, even for a state like Pennsylvania. So the bar is being raised, and so the consultants out there are really enjoying a place in the spotlight because the demand is there today. I'm just going to try to get through this. Here's M&A activity by sector for the first half. Among public companies, a couple of interesting things to see here. I'm going to jump to ag tech and consumption devices. So as all of you I think know, there is no legal way to do interstate commerce in this industry today. You get a license for a state. Well, as you're building your brands, or as you're offering your lighting systems and you're located in Colorado, or as you're coming out with your vape, or your infused product. You know, in order to get into a next state, you got to go get, you know, you have to be domiciled in that state. You have to affiliate with licensed producers. It's very difficult. It's really difficult to scale a large business in this industry because of the institutional block of the lack of interstate commerce. So what's happening? Companies are acquiring other companies in other regions and other states to develop that regional breadth of product line, or they're doing joint ventures, or they're doing licensing agreements, or they're doing distribution agreements. That's the driver of all of this strategic activity that we track in this sector, whether it's M&A or otherwise. It really is all in an effort to establish breadth of distribution, breadth of sales, breadth of market share, because of the fact that this is still a federally illegal product. So on one hand, it's a great challenge to companies. On the other hand, for the better capitalized companies, the ones where there's real management experience in doing these types of strategic initiatives, it's a significant opportunity to be a smart buyer, to be a smart acquirer of assets in this space. It's an asset-rich environment right now. Similarly, M&A activity by sector among private companies, you'll see a much lower level of activity due to one factor. Private companies, as M&A, when they're affecting M&A, they're cash buyers. Public companies, when they're affecting M&A transactions, you want to be an equity buyer. You want to use your stock as a currency or as consideration for at least a part of the purchase price of XYZ acquisition. So one of the main advantages of being public, and there are a couple, but one of the main advantages, if you have a legitimately valued stock that, you know, private company sellers believe has sustainability, you know, you can make the pitch that we're not cashing you out, Mr. Entrepreneur, small cannabis business owner. This is not a matter of cashing you out so you can get your money and go on the beach. Come along for the equity ride. Take our equity, because the combination of your business and ours will grow the value of our company and ultimately be reflected in the value of our stock. So you see a much lower level of M&A activity among private companies, but it's still happening. So Derwin, I think gone for, however, 35 minutes or so, and I would love to open up to Q&A.
The first question: how can you assist privately held and publicly traded cannabis companies?
How can we assist privately held and publicly held cannabis companies? Well, I think we've described a lot of that. So, with the risk of continuing to repeat myself, you know, my strategy as a, you know, as a strategist, investment banker, advisor to companies, is always a combination of, first of all, we have to be experts in the space. We have to talk the language of the industry as well as the CEO. That's first. And that's why we spent 6 or 7 months trying to understand this industry and get connected before we launched Viridian. So one of the first touch points for either public or private company is looking to build a real board. We've taken 4 or 5 of our board advisors already and placed them on the boards of client companies. And in, I think, every one of those cases, that board member has written a check, has invested in that company. And the cachet, you know, these are very, very significant entrepreneurs that we've done this with. If you folks want to speak to me personally, I'm happy to fill you in detail, but brings a lot of value. We help companies with their budgeting and forecasting, putting together a legitimate set of financial forecasts that are not only reasonable and somewhat achievable, but defendable, right? So there's metrics and there's drivers of growth and there's measurements that the investor can understand. Okay, if you open that many stores, or if you develop that much IP, or if you launch into another state, yeah, I can see how your revenue growth grows and it follows down the income statement. So we spend a lot of time working with our companies and refining their forecasts and their internal budgets that we then take back to the board for approval. All of this in an effort to professionalize the businesses to the degree that we can help, and then put us in better position, putting on our investment banker hats, to go out and raise capital from the investment community. So it's really a combination of strategic advisory, true investment banking, and then working to increase the visibility of our clients to the investment community and to the industry. It's those services that we provide work hand in hand, and we only take on client assignments where we're engaged to deploy all those services, because I think it really does lead to the highest value results.
Next question. Would you consider Viridian Capital Advisors as the face and voice of Wall Street for cannabis?
Would I consider Viridian to be the face and voice of Wall Street for cannabis? I would love to say yes, but that's not for me to say. But thank you for raising that question. I'll take it. I will say that we've been very fortunate to have entered the space early and to bring a lot of years of experience on Wall Street, working with industries like this and understanding the development and growth and funding of emerging growth companies, and coming out with the depth of market intelligence, the data, as we've gone through. So I don't know if we're the face and voice of Wall Street. I do know that I believe we have one of the most recognizable brands in this industry in the world. It's been our experience as we've gone. People seem to know us or have seen our work or whatever. I think it's just a function of, jumping in early and doing the quality of the work that we've been trained to do.
Next question. What are the top 5 catalysts you see for the cannabis industry going forward?
Well, I think the major catalyst is the November elections, because at the end of the day, there is one principal driver of growth in this industry, and that's state legalization. The $5.4 billion that is reported that legal states did in sales last year is a direct correlation to new states legalizing and then the rollout of the legal marijuana programs in those states. So there's really a linear tie to the growth of the industry and to the number of legal states. So, the 8 or 9 states that have ballot measures for vote in November are critical, and because the states are so large by population and by the amount of historic marijuana use in these states, and I'm specifically referring to California here, we're kind of viewing this as V2, or the next leg up in the industry. California, by some measures, black market and legalized medical included, is probably larger than the entire cannabis market is today in the U.S. So bringing that state on with real guidelines, with real controls, unlike what it is today, having been sort of medically legal, I'm doing air quotes, for 20 years, is just so important. So we all have to hope that California does pass in November. Nevada, critical, and critical specifically to Nevada, because Nevada is the only state in the country, at least right now, that is planning to have reciprocity, meaning they'll accept a medical marijuana card from any other state. That's not done in any other state. And so, when you consider, I think there's 40 million people a year that visit Nevada, and I guess the majority of those Las Vegas, to have fun in a number of different ways. This is going to be another way to have fun. But the reciprocity dynamic is really something that's very unique. So I think the more legal states, Derwin, is number one. More professional capital continuing to come into the industry, not only because it brings liquidity, but it's also bringing a mandate for better operating controls, better operating measures, just more seasoned management. I think that's critical. I think acquisition activity continuing to increase, albeit off of very low levels, is very important, because M&A often establishes valuation benchmarks and a valuation floor for companies, because that company was just acquired for X. So the other 10 companies just like them should be worth something around X. So it establishes liquidity and establishes benchmark valuations. And then I think the last thing is the establishment of a business in the East Coast, because there really is none today. The New York market with the 5 license owners is a disaster, unfortunately. It'll change as the laws start to loosen up in terms of the disease states that apply for a medical marijuana card. But if we can get Vermont and Massachusetts and Florida in combination with New York and Connecticut and Pennsylvania and New Jersey, we're located in New York, so I'm speaking very selfishly here, then we have an East Coast market. And now you have the coasts and Colorado, you're beginning to really form a national market. So I think those are the primary drivers.
Next question. And I think you kind of touched bases on this during your presentation, but what would be the best case and worst case scenarios for the cannabis industry?
Yeah, I think you're right. So the best case, I think I just went over. Every state legalizes that are up for voting in November. That's the best case. Worst case, is what the existential threat is today for the cannabis industry, and that's not Schedule 1. That's some reversal of the Cole Memorandum and some reversal of the Supreme Court ruling last fall that mandated that marijuana legalization is a states' rights issue. It's not a federal issue. If that was reversed, it would be a disaster.
All right, and the next question, what do you consider to be the top sectors of the cannabis industry and why?
I would say that each of the 12 sectors, as we've categorized the industry into, are positioned for growth. And the rising tide lifts all boats kind of paradigm. If we have, the majority of the states pass in November, every one of those sectors will benefit. But I think specifically there's some unique opportunity in ag tech, agricultural technology. The ag tech world is a global business. There you have Monsanto and you have Dow and you have RJR, and it's just it's one of the largest industries in the world. You're feeding the globe, and now there's a great, really danger and sense of urgency. There's a tremendous food shortage challenge in the world, particularly in the less developed countries. So ag tech is always behind improving efficiency and optimizing growth cycles and yield. That's now coming into cannabis. And as I said before, it's come in slowly because the folks that have been in this space growing for many, many, many years don't want to be told you need to use a different lighting system or you need to use a different air filtration system. Well, why are you telling them what they know better than you? That was a dynamic that was real, 3, 4, 5 years ago. It's starting to change again because the grows are getting larger, the requirements for capital is getting larger, and that capital is coming with a mandate to improve efficiency, move to a low-cost production position, and be a survivor. So I think ag tech is very, very significant in this market. Biotech, pharma, as I said before, certainly from a social perspective, the most important of all the sectors. The origin of this change in cannabis is not for people to get access to beautifully rolled joints. It's for people to get access to medicine. That's the base of advocacy for the past 5 decades. And unfortunately, because of the NIDA rules and the monopoly that was granted to University of Mississippi, there has been there's been a prohibition against the study of the plant and R&D on the plant and clinical trials on the plant. It's been almost a standstill. Israel is 15 years ahead of us in that regard. Ultimately, though, there will be a pill that you will be able to buy. You're probably going to buy it in Duane Reade or Walgreens. You're not going to buy it in a medical marijuana dispensary. And that's the pill that's going to be your antidepressant, your painkiller, your anti-inflammatory, your appetite driver. It's going to replace opiates and pharmaceuticals. All of this knowledge is known today in an anecdotal basis. You can talk to many people in this industry who are here because they saw the effect that cannabis, whether it's THC or CBD or some combination, has had on their wife or their niece or their nephew or their brother. I mean, I hear that every day. So biotech is just a very significant opportunity. And I think lastly, I'll end with infused products. You know, these are the brands that are the vapes, the oil, well, not the vapes, but the oils, the infused products, the drinks, the candy, the gummy bears, so on and so forth. This ultimately is turning into a consumer packaged goods market. Not yet, got a long way to go, but that's what this is going to be. And just like you go in to buy your favorite brand of Hershey chocolate bar or another brand, or your favorite brand of vodka, you know, there's brand loyalty, there's brand emotion, everything is brand. That's what's going to ultimately happen here. The challenge is, again, no interstate commerce, you can't build a national brand yet. But you go to Oregon, you go to Washington, you go to Colorado, you're going to see the same brands appearing throughout the dispensary. So there's some early market share leadership, but still very, very early in who is breaking out. Is it Dixie? Is it Medicine Man? Is it the Incredibles? One of those is going to become the Hershey's of the industry. So very unique opportunity to look for and I guess potentially invest in one of these companies when they're at, you know, such a nascent stage.
Well, thank you, Scott. And the last question is, how do someone receive your published reports? Is it a cost to receive those published reports?
It is not a cost. We are not in the business of making money from our reports or our data. So they are available. They're on our website. You just have to fill out, you know, who you are and your name and phone number, just some contact information. Because we are a FINRA regulated investment banking practice, you know, we toe the line. So we release our reports only when they're ready to be released and they follow the proper guidelines along disclosure and such. But we do not sell these reports, Derwin. They are publicly available.
Okay. Well, we really appreciate your presentation, Scott. And as a reminder, the Cannabis Investor magazine features Scott Greiper on the cover of our September-October issue. One of the reasons we decided to put Scott on the cover, we think he has been instrumental and will be instrumental in the future in introducing cannabis to Wall Street and Wall Street to cannabis. So he is the first individual we profiled on the cover of our magazine. In the past, it's always been a publicly traded company. So he's the first individual we featured. Along with Scott, we've sub-featured some other companies in the space. Those companies would include Cannacorp, Heliospectra, Digipath Incorporated, Golden Leaf, and Civilized Worldwide Incorporated. So the new issue of the magazine will be distributed probably at the latest tomorrow. So make sure you go to cannainvestormag.com and sign up for a free subscription. Again, Canna, C-A-N-N-A, investormag, M-A-G.com. Well, thank you, Scott, and we look forward to hearing from you in the future.
Terrific. Derwin, thank you. Great job as always.